Hello members, what do you know about SMEs? SMEs plays a significant role in the African market. This includes job creation and economic development. In Kenya, research shows that SMEs create 30% of jobs annually and contribute 34% to Kenya's GDP. Practically, many SMEs finance their projects through their own funds, family and friend funds due to difficulties involved in obtaining finances from lending institutions. Also, other than banks, non-governmental institutions and non-banking institutions finances SMEs. SMEs in African market faces various challenges in accessing financing, including being charged higher interest rates and fee or lack of access to financing. Welcome to Opportunities Meeting Place. Our today's topic is 10 scaling attributes that lending businesses should apply to meet the financial needs of SMEs in African marketplace. These are 1. Capacity building for both financiers and SMEs. The lending institution need to invest in financial literacy forum for SMEs. The institution requires businesses and financial plans, but many SMEs that really need credit do not have the capacity to prepare these plans. The SMEs can be trained on various aspects including record keeping, strategic planning, among others to enable financial institutions make sound judgment in extending loans. 2. Credit reporting. Credit reporting helps to reduce the gap between borrowers and lenders. It allows lenders to learn more about their borrowers' characteristics, past events, repayment history, and current debt exposure. This data helps lending institutions to price their loans using a more comprehensive risk assessment of their clients. Therefore, to meet the profitability enhancement needs of SMEs, credit reporting is a crucial area of investment for the lending institution. 3. Investment in technology. This will help minimize risk, enhance efficiency that will lead to lower lending costs. The financial landscape has been changing rapidly and we have witnessed fast transformation. Lending institutions have to leverage on ICT innovation to transform its value proposition with SMEs. With innovation, financing that is in line with the current market demand. The world population practically the youth are technical savvy, living in fast-paced environment where convenience and transparency is key. The digital economy is propelling African economic growth, driven by fintech. 4. Push for policies. A weak legal environment can be a major constraint to the development of lending options, including asset-based lending. The collateral laws need to be changed since at the moment, research shows that banks offer minimal financing to startups. Working with key stakeholders, for example, the government in respective countries, the lending institution can then formulate financial policies and solutions that will safeguard SMEs and help them to grow further. 5. Invest in equity financing. This refers to all financial resources provided to a lending firm in return for ownership interests. The investment return is entirely determined by the success of the firm. This includes both private equity and public equity. In an effort to increase lending to SMEs, lending institutions need to diversify and venture more into equity financing to enable meet the SMEs' needs. 6. Venture capital. This is equity investment aimed at supporting the pre-launch, launch, and early-stage development phases of a business. Most lending institutions intervene at a later stage once the business has stabilized, while in essence, SMEs requires financial support from the startup stage. 7. Asset-based financing. Value of specific asset is monetized and SMEs are able to obtain working capital under more flexible terms than what conventional lending channels are offering now. This will serve the needs of the young and small firms that have difficulties in accessing traditional lending options because they lack credit history or face temporary shortfall or losses. 8. Alternative debt financing. This is different from traditional lending. Investment in capital market can provide financing to SMEs through banks. This includes cooperative bonds and indirect options like securitizing debts with alternative financing. SMEs does not require to access capital market directly, but rather receive bank loans whose extension is supported by the banking institution in the capital markets. 9. Venture into partnership. African Development Bank over the years has called for an increase in new affordable financing scheme in an effort to lobby for increased financing for SMEs. The African Development Bank wants lending institutions to increase lending to meet demand by Africa's SMEs. World Bank, on the other hand, is exploring other financial ideas like crowdfunding. African Development Bank, World Bank, International Finance Corporation, United Nations Conference on Trade and Development, International Monetary Funds are just among many lending organizations that lending institutions can align their expansion goals with the forged meaningful partnership that will lead to meeting financial needs of SMEs. There also exist small organizations and programs formed in various countries with an aim of boosting SMEs financing and help institutions to formalize and optimize their operation. In Kenya, for example, Inuka Enterprise Program was designed with an aim to de-risk SMEs to enable them access finances. This institution is run by Kenya Bankers Association. 10. Innovation. Lending institutions need to come up with attractive products and services that will address the challenges faced by SMEs in African market in acquiring low-cost loans. Product innovation in the SMEs finance space is required to bridge the lending gap. Are you an SME that is having challenges in obtaining financing from lending industries? Are you a lending institution that is yet to tap into the market of financing startup companies and SMEs? Talk to us. We will be able to come up with strategies that will help you position yourself in the market with an aim of meeting your organization objectives. Until then, subscribe, like, leave a comment. This is Opportunities Meeting Place. Goodbye.